Welcome to the 3Edge Weekend Review for the week of November 8th. I'm Fritz Folts, the Chief Investment Strategist here at 3Edge, and with me here today, once again, Eric Biegeleisen, Director of Investment Research and Deputy Chief Investment Officer here at 3Edge Asset Management. Today, along with a brief update of the global capital markets, Eric and I will be discussing Bitcoin and the world of cryptocurrency. We are fortunate to have Eric here for this discussion because he is very well versed in all things crypto, and Eric has also been instrumental in adapting our proprietary modeling to the cryptocurrency asset class, which we utilize in our Crypto Plus strategy. Before we get to that, let's take a quick look at the recent market activity for the past week. And the action this week was much more focused on the bond market and interest rates than the stock market. And what was on investors' mind this week was inflation, particularly since the recent report on the U.S. Consumer Price Index, which showed a 6.2% year-over-year increase in CPI in October. And that was the highest CPI growth rate since all the way back in 1990. The CPI report brought into even sharper focus the debate about whether current inflationary pressure will prove to be transitory, as Chair Powell and the Fed insists, even as the Fed and many economists insist that inflation is transitory and will not be a problem for much longer. People who buy gasoline for their cars, fuel to heat their homes, and food for their family may disagree. And importantly, the cost of food and fuel are two of the strongest components when it comes to inflation expectation. In addition, rising inflation is not only an issue here in the U.S. In China and Japan, producer prices are also rapidly rising, and the same is true in Germany, which is the world's fourth largest economy. So it looks increasingly like consumers will be feeling the effects of inflation for the foreseeable future as the global economy reopens in the wake of the COVID-19 pandemic. And then, to cap it off, on Friday, the University of Michigan preliminary U.S. Consumer Sentiment Index decreased unexpectedly as Americans grow increasingly concerned about rising prices and inflation. And what's important here is for investors is that both stocks and bonds can suffer if inflation gets high enough to actually hurt the post-pandemic economic recovery. And this has intensified the search for assets that could weather price pressure and weather increased inflation. And those assets could be gold, which is a traditional inflation hedge, or even less traditional inflation hedge, such as cryptocurrencies like Bitcoin. Which brings us nicely to today's topic, Bitcoin and cryptocurrency. I think it would be difficult to find anyone who hasn't at least heard of Bitcoin, which recently reached a record high of 69,000. Opinions differ as to whether cryptocurrency is just another bubble of an asset class benefiting from extraordinarily easy monetary policy, or is there more to the story? And actually, I do think that there will be more to this story going forward, and it's important to keep in mind during today's discussion about crypto that digital currency such as Bitcoin or Ether, this is where crypto technology begins, but it certainly isn't where crypto will eventually end. And we're most likely in the early stages of crypto. So with that, let me bring Eric into the conversation. As I said, he has a deep understanding of the crypto space. So Eric, I know that a great many people are somewhat just perplexed when it comes to Bitcoin and somewhat confused about what exactly Bitcoin and cryptocurrencies are, how they work, and why they are so popular. Although I guess it's difficult to not be popular when you could have bought Bitcoin at 5,000, now it's worth 69,000 or somewhere in that range. So why don't we provide our listeners with at least a foundational understanding what cryptocurrencies are, how they work, and then maybe even spend a little bit of time on how we look at crypto here at 3Edge and even talk about our crypto strategy, if you wouldn't mind. So turning things over to you.
Great, thanks, Fritz. So I guess let's start with what crypto is. The first cryptocurrency, Bitcoin, was created in 2008 by a cryptographer or a programmer who used a pseudonym, Satoshi Nakamoto. And in its creation, he or she referred to Bitcoin as, quote, a new electronic cash system that's fully peer-to-peer with no trusted third party, end quote. And so since the launch of Bitcoin, we've seen this explosion in the launch of other cryptocurrencies, well north of 10,000 different types of currencies that leverage this idea of being a form of money a digital money with no trusted third party. That is, there's no central authority like a central bank or a treasury to maintain or issue the currency. Different cryptos carry different purposes and utility and function. For example, blockchain technology may be used as a permanent record, like the use case for NFTs or non-fungible tokens, low-cost money transfers, acting as an intermediary for contract execution, so-called smart contracts, method for early stage startup capital for firms, and so many more. However, for our purposes here today, we can think of Bitcoin and cryptocurrencies as digital currency, which can be exchanged and verified between parties with no need for any central authority or intermediary institutions. And if Bitcoins and or other cryptocurrencies are considered valuable, it's probably because they're useful and limited in supply.
Okay, so you mentioned Bitcoin cryptocurrencies, and you said they can be exchanged and verified between parties with no need for central authority. And so just what exactly do you mean there? Like if there's no Department of the Treasury or if there's no central bank, well, then how are these created, I guess would be my follow-on.
Right. Okay, so yeah, let's step back a bit. So the code base that runs Bitcoin, called Bitcoin Core, was published publicly so that others could download it and become a part of this Bitcoin network. And you become a so-called miner. And each of these miners has an identical copy of the entire blockchain of Bitcoin. And you can think of the blockchain as simply a database. It's a historical record of all transactions between the digital wallets holding and transacting in Bitcoin going back to inception. So these miners perform these brute force calculations with high-powered computers to satisfy a complex algorithm. And the point of this is all to validate the most recent transactions occurring on the network. And if they satisfy the algorithm first, they not only prove this legitimacy of these transactions for which they receive a fee by the people transacting, but they also win a mining reward of newly minted Bitcoins. So collectively, these miners around the globe act as the intermediary to validate all transactions on the network. And unlike a credit card transaction, which goes through the parent company to validate, or unlike a central bank, which can issue newly minted currency at the touch of a button these days, Bitcoin utilizes the miners who don't know and don't interact with one another to collectively validate transactions. The Bitcoin, yeah, so just to expand on a little bit more, the Bitcoin core code was written such that the maximum supply of Bitcoins will never grow above 21 million coins, with a largely predetermined schedule of when and how these newly minted mining rewards are to be released. And it's also worth noting that each Bitcoin can be divided into 100 million pieces, which have been called Satoshis, which is a nod, I think, to the creator, no doubt. And it's the smallest unit one can transact in within Bitcoin.
Interesting. So I actually have another follow-up question from that, and that is if we know then how Bitcoins are created, how are they destroyed? Because you hear a lot of stories about how that happens. So maybe just cover that briefly if you could.
Yeah. As for destroyed coins, these might be referred to as burned or lost coins. When you own a Bitcoin or a fraction thereof, it resides in this digital wallet with two addresses: a public address that you might share with others so they know where to send you new coins, and a private address or a private key, which is really the actual Bitcoin. Think of the dollar bills in your actual wallet. They have serial numbers on them. And think of those serial numbers as your proof that the dollar bill is yours. When you own a piece of a Bitcoin, you own a serial number that no one else knows. And so if you lose that number, then the Bitcoin is lost. And there have been countless stories of folks who, purchased some Bitcoin a decade ago. It got stuck on a USB thumb drive, or it's in a laptop that's now in a garbage dump, and it's worth millions, right? Currently, there's just shy of the 21 million, about just shy of 19 million Bitcoins have been created into existence. And there are some estimates that there's around 3 to 4 million that are lost and gone forever, which further limits the supply.
Yeah, I heard that something like if you forget your password, you have 10 tries and then it's locked forever or something, right? That's a high risk game there. So, okay, great. That's super. So now maybe just explain a little bit more about how does one get a Bitcoin? Where does one get them from? What does it mean to invest in Bitcoin? How does all that work?
Sure. Yeah, well, one can buy Bitcoin on any number of cryptocurrency exchanges by transferring US dollars into this platform. And then like one would buy a stock that has a bid and an offer on an exchange. Instead, here they can buy a Bitcoin or a piece of one in the same
Mhm.
manner, from someone looking to sell.
Mhm.
If you don't want to buy and hold directly, you can buy Bitcoin futures or Bitcoin options. One can buy funds, investment funds that trade on regulated investment exchanges right alongside where stocks and exchange traded funds, ETFs trade. Though here in the US, we currently have, grantor trust structures that trade more like closed-end funds, but who
Mhm.
hold physical crypto. And then there's also newly listed ETFs in the US, but they hold Bitcoin futures rather than physical Bitcoin.
Excellent. All right, so now let's transition to considering Bitcoin as an asset class. And here it's important to put out some disclaimers about, just the degree of volatility that Bitcoin has experienced. So let's take a look at a chart here, and the chart is going to show you two lines. One is the S&P 500 on the bottom, the reddish maroonish line, and above it you can see the blue line, which is the standard deviation of the Bitcoin. And you can see here that Bitcoin is 5.8 times more volatile than the S&P. I mean, it makes the S&P look like a money market fund sometimes in terms of the volatility that you can experience with Bitcoin. So now that we see how volatile Bitcoin can be, how might investors think about investing in such a volatile asset class?
Yeah, as I mentioned earlier, there are many ways to invest in Bitcoin, Ether, and the like. And it's exactly for this reason that you mentioned in the chart that you showed, just how volatile an asset class cryptocurrencies can be, that we decided to launch a crypto strategy that we've named Crypto Plus. We wanted to be able to provide a solution for investors to gain access to this emerging asset class that allows one to participate in a meaningful way on the upside while we seek to, attempt to limit the volatility and the peak to
Mhm.
trough maximum drawdowns, those big declines associated with these types of investments. Just the way we seek to manage volatility and risk across our entire suite of investment solutions. And
Right.
just take a look at these top five drawdowns for Bitcoin. You really need to have a longer term focus as a buy and hold investor with a really strong stomach to not sell when your investment falls, by 80 or 90%, which has obviously happened a few times already in just the last 10 years of its existence.
Excellent. Great segue into describing how we invest then in cryptocurrencies on behalf of our clients in our Crypto Plus strategy. How does our Crypto Plus strategy work?
Yeah, so our approach to our Crypto Plus strategy is to leverage the same modeling techniques we utilize in our model of the global capital markets, which combines the three edges that we use of valuation, economic, and behavioral forces. With cryptocurrencies still in their early days, it's still a bit like the Wild West. And we find reasonable valuation approaches influencing price and certainly behavioral factors influencing price, but less so with economic forces at the present time. You alluded to that early on about the idea of perhaps Bitcoin being an inflation hedge. Perhaps more global adoption, potentially central banks even becoming investors in cryptocurrencies. That might allow us to introduce those types of factors as well into the model. Overall, though, the intent is to provide meaningful participation in the upside moves of cryptocurrencies while also seeking less volatility, less drawdown than a
Mhm.
standalone buy and hold investment.
Excellent. And so then I'll just add on to that a wee bit in terms of disclaimer language that, even though we seek, we're looking to manage the volatility, we're looking to manage the risk in the crypto strategy, it is important to realize that we're talking about degrees of potential volatility here, potential risk in the crypto plus strategy that fall well outside of traditional investments in stocks and bonds. So maybe I describe Bitcoin and cryptocurrency as a caveat emptor, buyer beware asset class, no matter how one participates. And obviously recommend talking to, a financial advisor if you have one before considering investing in any crypto strategy. I mean, there's a reason to believe that cryptocurrencies are here to stay, but there are no guarantees that that will be the case. There are risks such as transparency, there are ESG concerns, and then there's the landscape. I mean, you could have government regulation come to fruition, which could, pretty much change the landscape of the cryptocurrency market. But let's wrap it up there. Great, Eric, thanks. I know that you've helped all of us to have a better understanding of the world of cryptocurrencies. So that will do it for me and for Eric. Be sure to join us next week for another edition of the 3Edge Week in Review. And remember, all of our videos are available on our 3Edge YouTube channel, as well as on our website at 3edgeam.com. If you do happen to watch us on YouTube, we would be most appreciated if you take the time to simply click on the like button. So until next time, on behalf of Eric and everyone at 3Edge, thanks for listening.